Thinking about doing a bit of spring cleaning to your investment portfolio? At ETF Market Insights, we got you covered. Check out these exciting episodes curated specifically for the DIY investor. Special guest speakers and insightful industry experts will provide you with the information and education you need to confidently manage your own portfolios. You won't want to miss these shows. Check out etfmarketinsights.com for more information. And don't forget to subscribe to our YouTube channel and hit the alert button so you never miss an episode.
Hi, Larry Berman here. I've already had a couple martinis. It's after market close on Friday. It's really been a tough week. It's been a tough month. Worst April for the NASDAQ since 2008. For the broader S&P 500, worst markets since 2002. It hasn't been a good start to the year for bonds, for stocks, for the average investor. It's been a crazy start to the year. So let's dig into the charts this week and see what we can see. We have a year-to-date chart of the S&P 500, and what we can see here is relative to the February extreme lows and the March extreme lows. So this was in the days just as Russia invaded Ukraine. Market bounced. It wasn't going to be much of anything over in a few days. Retest. So higher low, markets ripped higher. We're back at those lows. So here's the coin flip for Monday. Do the lows hold or not? And so we always need to look under the hood a little bit to get a sense of what's going on, because today's breadth was, a lot of stocks were down, but a lot of stocks were down by very little. So that's kind of a little bit of a divergence going here. So when we look for these types of divergences, we kind of look at some of the market breadth indicators. And so what we can see here now that the today's reading is down here around 27. So this chart didn't update today's number, but as of yesterday, we've got this little kind of divergence going. So today, lower low on a closing basis for the S&P relative to the lows we saw in February and March. Momentum or breadths, a higher level. So we're looking at this little divergence here, and just very, very subtly. But here's the other part of it. What's volatility telling us? So in the bottom chart here, we're looking at the red line. So in red, we've got the 4th month VIX futures contract, and in blue, the current month. And this blue line, measured in standard deviations, is the percentage that the front month futures is above the back month futures. And while we're not in capitulation or extremeness as we were in the days and weeks following, so we've got this divergence in volatility behavior too. So you have the breadth divergence, you have the volatility divergence, you have the test of support, and you had a narrow, strong leadership in a couple big tech stocks. Amazon today was the big one. So it's looking a lot more like the average stock is starting to perform just a little bit better. On the margin. This is a bit of a science here, not and an art at the same time. And so what's happening next week that this is going to change and hold? Well, of course, it's the Fed meeting. And on Monday, we get the Treasury funding announcement. So my good sources tell me that the U.S. Treasury has so much more money than they ever expected, with tax receipts coming in way higher than expected. Notwithstanding the negative GDP quote in Q1, but based on 2021, the tax receipts are great. The Treasury isn't going to have to fund as much debt over the next quarter, and the massive amount of liquidity in the reverse repo market could really take on any funding. So there probably isn't a lot of coupon to get funded, which means less need for bonds, new money for bonds as the Fed's unwinding that. You put all that math together, and there's going to be a lot of money out there chasing assets. That bodes well for another bounce here. But economically speaking, bounce, failed rally, continue to see new lows as the Fed tightens in to what increasingly is looking like a potential recession. So caution still, but we're playing for a bounce. Bull bear picks of the week, folks. What do you do here? I went to my 99 maximum percent, full on exposure here to play for some sort of bounce in the next few weeks. With the unmitigated selling in April, when April's supposed to be a good month, we're not going to get the sell in May and go away. We're going to get the bounce in May and not here to stay. You heard it here first. Be cautious, but let's play for a bounce here. Have a great week, everyone.
Thinking about doing a bit of spring cleaning to your investment portfolio? At ETF Market Insights, we got you covered. Check out these exciting episodes curated specifically for the DIY investor. Special guest speakers and insightful industry experts will provide you with the information and education you need to confidently manage your own portfolios. You won't want to miss these shows. Check out etfmarketinsights.com for more information. And don't forget to subscribe to our YouTube channel and hit the alert button so you never miss an episode.